If you are a senior receiving Social Security, Medicare, SSI, or any other government benefit right now, I need you to stop what you are doing and pay close attention to this video. April 2026 is not just another month on the calendar. For millions of seniors across the United States, it marks a turning point, a window of time where the decisions you make and the actions you take could directly affect how much money lands in your bank account, whether you keep your health coverage, and whether you are getting everything you are legally entitled to receive. Some of these changes have already quietly gone into effect. Others are approaching their deadlines fast, and if you miss them, you could be leaving hundreds, even thousands, of dollars on the table, or worse, losing benefits you worked your entire life to earn. I know that sounds serious, and honestly, it is. But that is exactly why we are here today. This channel exists to make sure you never get caught off guard. So whether you are watching this for yourself, or helping a parent, a grandparent, or an older neighbor stay informed, please watch this entire video. Share it with anyone you think needs to hear it. Because the information we are covering today is time sensitive and it matters deeply. Let us start with Social Security, because this is the one that touches the most people. As of January 2026, the cost of living adjustment, which most people know as the COLA, came in at 2.5%. That means if you were receiving, say, $1,800 per month in December of 2025, your payment went up by about $45 a month starting in January. Now, some of you may be thinking, that does not sound like much, and honestly, for many seniors, it does not go far enough given how expensive groceries, medications, and housing have become. But here's the thing. Not everyone actually saw that increase show up correctly in their payments. If your January, February, or March deposits looked lower than expected, or if your payment amount has not changed at all, you need to call the Social Security Administration right away. The number is 1-800-772-1213. Do not wait. Do not assume it will fix itself. Errors in benefit calculations do happen, and the SSA will not automatically correct them unless you report the problem. Now, here is something that a lot of people are not aware of, and it is one of the most important things in this video. April 2026 is the month when many Social Security recipients need to double-check their earnings records. The SSA uses your lifetime earnings history to calculate your benefit amount. If there are mistakes in that record, missing wages from a past job, incorrect income reported by an employer, or gaps from years you worked but the record shows nothing, your benefit could be lower than it should be. You can check your earnings record for free by creating a My Social Security account at ssa.gov. If you see something that does not look right, you can dispute it. But here is the urgency. The longer you wait to correct errors, the harder it becomes to track down old payroll records and employer information. Some records from decades ago are already difficult to locate. If you have not reviewed your earnings history in the last year, please do it this month. Let us move on to Medicare because there are some very important April deadlines and updates you need to know about. If you are enrolled in a Medicare Advantage plan or a Part D prescription drug plan, you may have made changes during the annual enrollment period last fall. Those changes became effective January 1st, 2026. But here is what many people do not realize. Medicare also has a special enrollment period that runs from January 1st through March 31st each year, specifically for Medicare Advantage. That window has now closed for most plan changes. If you tried to switch plans or drop your Medicare Advantage coverage to go back to original Medicare during that period, your new coverage should now be active as of April 1st. If you made that switch and your new coverage has not kicked in yet, call 1-800-MEDICARE immediately to find out what happened. For those of you who did not make any changes and are now realizing your current plan is not meeting your needs, maybe your doctor left the network, your medication is no longer covered, or your premiums went up more than you expected, do not panic. There are still some options. If you qualify for a special enrollment period due to a life change, such as moving to a new area, losing other coverage, or qualifying for extra help with your drug costs, you may still be able to switch plans outside of the standard enrollment window. It is worth calling Medicare or speaking with a licensed Medicare counselor through your state health insurance assistance program, known as SHIP, to find out what your options are right now. Speaking of extra help, this is one of the most underutilized programs for seniors in the entire country, and April is a great time to apply if you have not already. Extra help, also called the low income subsidy, helps people with limited income and resources pay for their Medicare Part D prescription drug costs. We are talking about significantly reduced premiums, lower deductibles, and much smaller copays at the pharmacy. In 2026, the income limits for extra help have been adjusted slightly upward, which means some people who were previously told they did not qualify may now be eligible. If your monthly income is roughly $1,900 or less as an individual, or around $2,500 or less as a married couple, you should absolutely look into this. You can apply through the SSA at ssa.gov or by calling 1-800-772-1213. There is no cost to apply and no obligation, so there is truly nothing to lose by checking. Now let us talk about SSI, which stands for Supplemental Security Income. This program supports people who are 65 or older, blind or disabled, and who have limited income and resources. As of January 2026, the maximum federal SSI payment is $967 per month for an individual and $1,450 per month for a couple. These amounts also increased with the 2.5% COLA adjustment. But here is what catches a lot of SSI recipients off guard in April specifically: the reporting requirements. If you receive SSI, you are required to report any changes in your income, your living situation, or your resources to the SSA every single month. That includes things like receiving a small gift of cash, moving in with a family member, starting to receive a pension, or even having a slight change in what you pay for rent or utilities. April often brings changes for seniors. Tax refunds arrive, some people receive one-time payments from family, and seasonal income from part-time work sometimes starts up again. Every one of these changes can potentially affect your SSI payment. If you fail to report a change and the SSA later discovers it, they can ask you to pay back what they call an overpayment, which can be a serious financial burden. The SSA has been ramping up its overpayment recovery efforts in 2025 and into 2026, so this is not something to take lightly. If you are ever unsure whether something needs to be reported, err on the side of caution and call the SSA to ask. It is always better to report something that turns out not to matter than to miss something that does. Now, let us discuss something that has been causing a lot of worry among seniors lately, and that is the ongoing conversation around Social Security funding and potential future benefit reductions. There has been a lot of noise in the media and online about the Social Security trust funds running low, and some projections have suggested that without legislative action, benefits could face a reduction in the coming years. Some estimates have pointed to around 2033 as a potential crossroads. I want to be very clear with you. As of today, no cuts to Social Security have been enacted. Your current benefits are protected by law. However, this is a developing situation, and one that deserves your attention and your civic engagement. Contacting your congressional representatives, staying informed through trusted sources, and understanding how proposed legislation could affect your future benefits is genuinely important right now. We will continue covering these developments on this channel as things unfold. Let us also talk about pension updates, because this affects a large number of seniors who worked for state and local governments, school districts, utility companies, or private sector employers with defined benefit plans. Many pension funds have been adjusting their cost of living provisions for 2026, and some have announced changes to their payment structures or healthcare supplements. If you receive a pension, I strongly encourage you to log in to your pension fund's online portal this month or call your plan administrator to confirm your current payment amount, verify that your bank information on file is correct, and ask about any upcoming changes to your benefits. Some pension plans also have survivor benefit elections that need to be reviewed periodically. If your spouse or partner depends on your pension income, make sure you understand what happens to that payment if something happens to you. For those of you who have not yet claimed Social Security and are still deciding when to do so, April 2026 may be a good time to revisit that decision with fresh eyes. The break-even analysis, meaning the age at which it makes financial sense to have waited versus claimed early, shifts over time based on your health, your other income sources, and changes in benefit amounts. If you are between age 62 and 70 and have not yet claimed, your monthly benefit increases by a meaningful percentage for every month you wait past your full retirement age, up until you turn 70. But there is no benefit to waiting beyond age 70. After that, delayed retirement credits stop accruing. If you are close to 70 and have not yet claimed, April should be your wake-up call. You may be leaving money on the table every single month you delay past that point. There is also something called the retirement earnings test that affects people who claim Social Security before their full retirement age while still working. In 2026, if you are under full retirement age for the entire year, Social Security will withhold $1 in benefits for every $2 you earn above $22,320. If you reach full retirement age during 2026, the limit is higher, about $59,220, and only $1 is withheld for every $3 above that amount. Once you hit full retirement age, the earnings test no longer applies, and your withheld benefits are actually credited back to you in the form of a higher monthly payment going forward. But in the short term, if you are working and collecting Social Security before full retirement age, your April check could be affected by what you earned in the first few months of this year. Make sure you understand how this works so you are not caught off guard. One more thing I really want to highlight this month is the importance of protecting yourself from benefits-related scams, which tend to spike in April for a very specific reason: tax season. Scammers know that seniors are thinking about government payments, tax refunds, and financial adjustments this time of year. We are seeing reports of phone calls, text messages, and emails claiming to be from the Social Security Administration, Medicare, or the IRS, telling seniors that their benefits are being suspended, that they owe money, or that they need to verify their information to receive a new payment. Please hear me clearly on this. The Social Security Administration will never call you and threaten to suspend your benefits. Medicare will never call you unsolicited and ask for your Medicare number. The IRS will not text you. If you receive any communication like this, do not respond, do not give out any personal information, and do not send money. Hang up, delete the message, and if you want to verify something, call the agency directly using the number on their official government website. Also, be aware that April is the deadline for some states' property tax exemption or relief programs for seniors. Many states offer significant property tax reductions for homeowners over a certain age, but you often have to apply by a specific date to receive the benefit for that tax year. If you own your home and have not looked into whether your state offers a senior property tax exemption, I urge you to check with your county assessor's office or your state's Department of Revenue this month. In some areas, the savings can be several $100s per year, and it is an entirely legitimate and underused benefit. So let us bring everything together, because I know that was a lot of information, and I want to make sure you walk away from this video with a clear action plan. Here is what I want you to do this week. Log into your My Social Security account at ssa.gov and review your earnings history and current benefit amount. If anything looks off, call 1-800-772-1213. If you are on Medicare and recently switched plans, verify that your new coverage is active and that your doctor and medications are covered. If you receive SSI, report any income or living situation changes that have happened since January. If you have not applied for extra help with Medicare drug costs and your income is limited, apply now. Check with your pension administrator to confirm your payment details and understand your plan's current provisions. If you are approaching age 70 and have not claimed Social Security, do not wait another month. And finally, stay alert for scams. Your benefits are yours, and no legitimate government agency will ever threaten or pressure you over the phone. I know navigating all of these programs can feel overwhelming. There are so many rules, deadlines, and moving pieces, but that is exactly why this channel exists. To break it all down for you in plain language every single day, so you always know where you stand and what to do next. If this video was helpful to you, please take a moment to give it a thumbs up. It helps more seniors just like you find this information when they need it most. And if you have not subscribed yet, please hit that subscribe button and turn on the notification bell so you never miss an update. We post new content every day covering Social Security, Medicare, SSI, SSDI, pensions, and all the government programs that affect your financial security. You have worked hard for these benefits. Let us make sure you keep every dollar you deserve.